All right, let's get straight to it. This video today is about compound interest and the magic of compound interest. So I get a lot of messages and a lot of phone calls from friends, people I know through social media, people who've watched my YouTube sessions about investing and what I've done in terms of investing. And last year I did a big comprehensive presentation for people on Zoom, and that was in August, and that's August 2020. And essentially, I let people know about my strong passion for stocks like Tesla, because the world is going through a transition right now. The transition being to electric vehicles. So it's just like being in the 1920s, where we're making a transition in the world from horse and buggies to automobiles. And that's what's happening right now. It's going from internal combustion engine vehicles to electric vehicles. And Tesla is the leader by far. So it's very clear to me that Tesla is a stock that people need to take very seriously. And I've been an early investor in Tesla. And so the people who did the Zoom seminar last year, those who actually bought Tesla stock, this was before the split that happened at the end of August. Tesla's stock price has now quadrupled since then. So people have made 4 times their money since then. And I get phone calls and messages requesting this answer to this question, and that is, should I take profit? Should I take money off the table? Should I take money off the top from my Tesla earnings? And my answer is a very strong and passionate no. You do not sell any portion of an appreciating asset, particularly an asset that will be appreciating for at least the next 10 years. You don't sell that. What you do is you borrow against it. And the reason why you don't sell it is because you will be losing on the compound interest action. And so what I'm going to do right now is I'm going to show you a compound interest calculator. I'm going to show you different stocks that I own and what their growth has been over a year, so that we can understand what type of assumptions we can make in terms of yearly return. And I'll show you also Twitter response from someone who is a wealthy individual, and they talk about how they make money by getting securities loans, and that's loans against their stock holdings. And they pay 1%, 2.5%, and so on in terms of interest, and that's what they do. So let's get into this right now. Let's get into this very interesting calculator. So right now, what you're looking at is the compound interest calculator. And the way that you will be able to see that is if you go straight to calculatorsite.com. You see that? And then you'll just go to compound interest on it. So you go to calculatorsite.com. I'll add it in the description below. So first of all, let's start with an initial balance. Let's just say that you start with $10,000 investing in your first year. So you put in 10,000 here, and then the interest rate is its growth, and we're going to do yearly. We're not going to do daily. We're not going to do weekly. We're not going to do monthly. We're going to do yearly growth, because we're long-term investors. Long-term investors have a lot of peace of mind. And actually, if you just hold, you'll do a lot better than people who are trying to time the market, because timing the market never really works for anybody. The market behaves the way it behaves, but you're looking for net positives over a long period of time. So if there's 100% return, that means that you doubled your money. And the question will be, well, is it realistic to say that you would get 100% return? And that is very realistic. And that's where we go here. Let's just look at Tesla. On the Tesla chart here, this is the 1-year chart. And Tesla has had a growth of 136% in the past year. That means the past 12 months. That means November This is November 17th, 2021. We're looking at 1 year, so that would be November 17th, 2020. And so since then, Tesla stock has done 136%, which is a 2.3x return if you were to put money into Tesla. But, and that is put money into Tesla November 2020. The big rise happened between August and November, so that's why you're missing out, where it would have been looking more like 800%. Let's look at other stocks, or let's even look at cryptocurrencies. Let's look at Bitcoin. So if I go into Bitcoin, and let's go to the 1 year, you see Bitcoin has 262%. You see it right there, 262% in the last year. That means you're getting a 3.6x return. So let's look at Ethereum. Ethereum, in 1 year, go to the 1 year chart, Ethereum has done 838% in 1 year. Let's look at a stock that tracks Bitcoin. This stock that I hold is called Mara, or Marathon Holdings, which is a Bitcoin mining company, amongst other things. And let's see how they've done in 1 year. 1,900%. That is a 20x return in 1 year. So when we go back to the compound interest calculator, 100% return is lower than anything that you saw. The Tesla was around 136, and it will be growing. It's just had some downs recently, but it will completely be growing. So we can be conservative and say 100%, but we saw that Ethereum did its numbers way above that. We saw that Mara did its numbers way above that, and Bitcoin did its numbers way above that as well. But if we're just going to be conservative and just say 100%, because I don't invest in dinosaurs, I invest in growth companies. And if I do 100% return in a year, I've actually had a bad year. I'm looking for more like 200 to 400% per year. That's how I roll. That's what I do. And that's what I try to advocate to people. I don't invest in dinosaurs, only growth companies and growth cryptocurrencies. So let's just say that you were going to do this for a period of 10 years. And the compound interval is 1 year, right? That is when you're getting that interest rate, or that interest 100%, 200%, 1,000%, 1,900%. You're doing it by a year's basis, right? And we like to hold our stock for more than a year because of capital gains taxes. If you hold your stock for less than a year, that's 364 days, you're going to pay a regular employee interest rate, regular employee tax rate, which is close to 40%, 30 to 40%. Whereas if you hold it for an extra day longer, 365 days or more, you are going to have a 15%. In most cases, you have a 15% tax rate. So when we invest, we're investing in things for the long term and not for the short term. So that's why we say 1 year here. And then let's just say every month you decide that you want to put in $500, right, into whatever investment vehicles that you have. It could be stocks, it could be cryptocurrencies. We're just lumping it all together and saying that you're getting at least 100% return every year for 10 years on $10,000, where you're putting in $500 a month. And let's see what this calculator tells us. At the end of 10 years, you will have $19 million. And remember, the numbers are very conservative in terms of the rate of return. So that's basically, you're doubling your money for 10 years. So let's look at this chart. This chart is very important. Your first year is 10,000. You start with 10,000. Your first year return, you get $28,000. Then you get 66,000. Then you get 141. Then that doubles. You get 291. Then that doubles. And you get 591,000. It just goes on and on and on. And the reason why it's not quite double because you're adding that $500 every month. So that's why you're not seeing 10 go to 20, but you're seeing 28 because all of that is being added into the pot. And you're seeing by year 6, you will become a millionaire. Now, here's the really interesting part about this. Most people at this point right here at $1.19 million are going to say, ooh, let me take some money out and let me go ahead and buy a house. Or, I'm a millionaire, I'll buy a house and I'll go ahead and I'll, buy an expensive car and start spending, go on a spending spree. But what happens is that if you just wouldn't have spent that money and gotten to year 7, you've gone from 1.1 million to 2.3 million. You just hold on again, you go from 2.3 to 4.7 million. Then you go to 9 million, then you go to $19 million. If you just don't touch that money, you leave it alone, and within 5 years after, or 4 years after you hit that $1 million milestone, you're going to have close to $20 million 4 years later. This is why you don't sell an appreciating asset. What you do is you borrow money against it. What do I mean by that? Let's look at this Twitter post right here. And if I can find the exact thing, yes, this is it right here. This is written by a professor named Scott Galloway. He's basically trying to send a message to Elon Musk about Elon Musk and the shares that he has and selling his shares or whatever. And he's saying, let's just read it. So you could do what most uber wealthy people do and borrow against your immense stock holdings. I do this. I get a rate of 1.8% from Goldman and 1% from Northern Trust. I bet you could get rates much lower. So what he's saying is that when he has a stock portfolio, he doesn't sell. He doesn't sell it. So let's go back right here. You don't sell it. You don't sell part of this 1.19 million so that you can ball out and live like crazy. What you do is you borrow against it and you can get an interest rate as low as 1%. That's almost like free money. But what happens is that when you borrow against it, that money is a loan. Let's just say you want to borrow $100,000. Instead of selling $100,000 worth, you would borrow $100,000 and just live on that. Because what happens is that this doesn't get touched. Not only does it not get touched, that $100,000 that you borrowed is tax-free because it's a loan. It's not income. And you go from 1.1 million to 2.39. You don't disturb this stack here. When you borrow, you don't disturb. And you can then decide that you're going to pay it back in 4 years when you got $19 million and take out another loan for $200,000 or $300,000, whatever it is, but it'll be so small compared to that 19 million, it won't even be a big deal. You can use 300,000 from that to pay back the 100,000 and keep 200,000 and live off of that, or however you want to do it. And it even gets uglier. Let's just say that you are very serious and you're getting a 200% rate of return. Let's do the math on that and see what that looks like. Let's say you're getting a 200% rate of return for 10 years, compounding it yearly, and you put in $500 a month to your investment account into a high growth stock, such as, something like this, Mara, which is 20x, 1,900%. Which follows Bitcoin essentially. And what you're saying is that Bitcoin is going to be around to stay, is always going to be growing. Ethereum is going to be growing as well. Tesla is going to be growing as well. So you're actually at a very good time in existence where you can pick different investment vehicles that are going to grow for the next 5 to 10 years because the whole financial industry is changing with banking and cryptocurrencies, and the whole transportation industry is changing with electric vehicles. You are living at a great time, to be an investor. It's a beautiful time to be an investor. So imagine that you're doing that 200%. And remember, I'm being conservative. The past year was 1,900 for Mara. Ethereum, let's go back to that. The past year for Ethereum is 794%, 800%. That's a 9x return. So it's not far-fetched to say 200% to be actually quite conservative. But let's just see what those numbers are when you calculate over 10 years. So you start with $10,000. If you do 200%, which is tripling your money every year, starting with $10,000, you end up with $930 million. Sounds crazy, right? Well, let's look at this. $10,000. Year one, you get $41,500. And you know what? Let me just take out the $500. Let's say you don't make any contributions at all. You just start with $10,000, but you put it in the right investment vehicles that are giving you 200% a year. You'll get $590 million. But look what happens when you just do $500 a month, how that adds up. That $590 million now becomes $930 million with just $500 a month for 10 years. You all are making those types of payments on your vehicles or whatever. And if you would just divert some of that money into high growth investment vehicles like certain cryptocurrencies and certain growth stocks, you'd be doing very well. So let's look at that. $10,000 becomes $41,000 in year one. Year two, it becomes $136,000. Year three, it becomes $419,000. By year four, you are a millionaire. But you're not, remember, we talked about it, you are not going to withdraw any of this money. You're going to hold it there because you have an appreciating asset, and we do not sell appreciating assets. We get rid of assets if they're depreciating, and then we funnel it into something that is growing better. And that's the only time that we would sell, if the fundamentals of a company or a cryptocurrency changes. That's what we do. We will sell that quickly and put it into something else that has better soil for growth. But we're always looking for growth. And you don't sell. Year five, you're a multimillionaire. From year four to year five, you're a millionaire year four. You're a multimillionaire with almost $4 million, $3.8 million. And then let's look at year six, $11 million, $34 million. Year eight, $103 million. Year nine, $310 million. Year 10, $930 million. And nowhere along this way do we get happy because we hit $100,000. Now we're going to, sell some of that and maybe sell $50,000 and go on a vacation because now we had $100,000 cash. We don't do those things. That's not what you do when you're building wealth. You build wealth by understanding compound interest rate calculator. And the sad thing is that many of us, the majority of us, were never taught this in school. If you're taught this in school, putting money away becomes different. And you don't put money away in a savings account. You put it in high growth investment choices, such as growth stock as Tesla, or growth stock like Marathon, which tracks Bitcoin. And we already see what Bitcoin has done, for the last 10 years. I mean, I'll do another video on what Bitcoin has done in the last 10 years, but you're talking about thousands of percent, like it's a crazy amount that I can't even, I don't even want to say the number on this video right now, but it's a crazy amount. I'll have that chart ready. That'll probably be the next video I do, where it compares investing Bitcoin or investing in gold. And it's just a no-brainer. In 10 years, you'd have lost money investing in gold, whereas with Bitcoin, you'd have made like over 1,000x. So it's crazy. So this is why I wanted to do this video and let you all know that compound interest is the holy grail of investing. That's why we do not sell appreciating assets ever. We do like this guy does, and we borrow against the stock holdings or the crypto holdings. And right now, there are different places where you can go. That's a whole different post where you can put your crypto in and you can borrow against your crypto. I do that. And, soon I'll be doing that with stocks as well. And you see Northern Trust is giving out a 1% interest loan. So that's incredible. So these types of things are very important for you to know about and for you to behave like what the wealthy do. It's unfortunate that we're not told this. So we're just kind of floating in the wind and people don't really understand money or the science around it. But, if this society is not going to teach you what's necessary to thrive, then I will. So hopefully you all enjoyed this video. And I will put the link to the compound interest calculator below in the description section, where you all can just go there and you can just play around with it. I just suggest you play around with it. I mean, you could start with, let's say it was $100. Let's just do that for fun. You start with $100 and you're doing 200% return every year. Let's say you don't put in any money any month. Let's calculate that. That's $5.9 million with $100. If you do 200% return every year for 10 years, you will end up with $5.9 million. Sounds crazy, right? And this is with no money being added every month. Nothing. So let's look at it. Year one, 100. Remember, you're tripling every year. 200% is actually 3x. So here you are, 100 to 300. Year two, 900. Year three, 2,700. Year four, 8,100. Year five, 24,300. Year six, 72,900. Year seven, 218,700. Year eight, 656,100. Year nine, $1.968 million. Year 10, $5.9 million. This is real. I'm not making this up. Why weren't we told this? Why weren't we shown this? This is transformative. So because I know what my return on my investments are every year, where I'm doing at least 200%, I can plot out and know where I'll be in the next 10 years. Worst case scenario, I could do 100% and I can plot out where I'll be in the next 10 years. And, just believe me when I tell you, it's a very sweet place. It's a very beautiful place. And I'd like you all to be there with me. So hopefully you all took this seriously and you enjoyed it, because I enjoy it. And I shouldn't be the only one having fun. And I know I'm not, because I get contacted by hundreds of people who actually watched the video that I did on stocks and the approach to buying stocks, because people were never told how to actually buy a stock. And people are doing well. They're doing very well. And, they just want to get more information on what do they do with the money that they have now, which is a great problem to have, right? That's a great problem to have. What do I do with the money I have now? And I'm saying hold it and keep it in your investment and let it compound so that you can reach that 10-year mark where you will have millions. See what we did with just $100. As long as it triples every year, you're going to hit $1 million within 8 to 9 years. So I hope this was helpful. Hope this was informative, and we'll be back with more. I'll be making a lot more posts, videos on these types of things. We'll cover all types of things beyond finance. We'll talk about some health stuff. We'll talk about exercise, nutrition. We'll talk about music, culture, all those types of things, traveling, Africa, all the things that I'm into. We will be able to discuss on this channel, and we'll continue with the podcast and get very interesting people that we can talk to on a regular basis to see what they're doing. So, stay tuned. Keep in tune with this podcast, and let me know how you feel in the comments below. Hopefully this was helpful. All right. Be good.